It's a battle of the gold bulls and bears this week. Joining us for Gold Game Film is our quarterback, Frank Holmes. Frank, good to have you back.
It's good to be here in a sort of a battle between the gold bulls and the bears.
So a tough week for gold last week, Frank, as the US dollar rally continues. But in your Monday morning report, you were saying how we need to be looking at GDP and how it could have a positive correlation with the yellow metal.
Yeah, there's research by World Gold Council that reflects on this whole love trade of gold jewelry, that a 1% increase in the GDP in the U.S. usually translates into a 5% increase in consumption of gold jewelry. So I think that's a positive factor. And it's roughly still 50-50, but everyone in North America is focused on the fear trade, and that is the dollar. So gold is down because the dollar is the prettiest currency in the market right now. It has higher yields. If you look at a 5-year government bond, U.S. bond, it's risen in the past 3 months. It has risen in the past month, and the euro has fallen. So money world floats to where they get the highest yield, and you're seeing that shift go to U.S. dollars. Gold's priced in dollars, strong dollar, gold's down, along with all the other commodities.
So the question, Frank, is if the U.S. dollar rally continues, what's the story for gold?
Well, gold will be under pressure. And it'd probably be, if it was in the first 6 months of the year, it'd be under more pressure with a strong dollar. But what we have to remember is that every time we have a strong dollar and it goes on for too long, all of a sudden our export industry and our GDP numbers start to slow down. And Europe starts to take off. So as Europe's pushing to go to a dollar, gold in euro terms is going to rise. And you're seeing that with British pound. You know, in the UK, the Royal Mint has come out with an online gold model that you can sell gold to you. And they were fortunate to remove the VAT tax. They got approval, so there's no expensive VAT tax. And guess what? Gold sales are rising in the UK. The pound is coming off against the dollar, and gold sales are rising. And in the U.S., even with a strong dollar, U.S. gold mint sales are up. So I think these are important underpinnings to the gold market. But right now, we just have to weather the storm.
Now, Frank, this week is an important week for data. On Thursday, we have the ECB meeting, which everyone will be closely watching. Since last month, Draghi announced that he would be starting his QE program over in Europe. What can we expect this week from the QE and from jobs numbers Friday?
Well, the jobs don't really trigger a big impact on my thought process, but the ECB, how much they're going to monetize their debt, what are they going to do with this injection as they're creating a QE? Are they going to turn around and start buying longer-term mortgages? I think what's really broken, Daniela, is the fiscal policies in Europe. They're anti-money. They're anti-free markets. They have a tax or a regulation on every aspect of your life. And whenever you deregulate, all of a sudden you see growth, like the Brits deregulating and taking off the VAT tax for gold sales. We get them rising. Until we get real fiscal policy changes, we're going to continue to see the currency be devalued, which is good for gold investors.
All right, Frank, let's get to our opportunities and threats now in the gold market, starting with opportunities. And the World Gold Council saying that gold will rebound by the end of 2014. The confidence in gold expressed by the council is due to the strong demand from India during the current wedding season. Frank, any surprises here?
Well, they're advocates, no doubt. But however, Modi, the new prime minister, we've witnessed mutual fund investors in India were redeeming this time last year. Since Modi has won, the Indians themselves have been plowing money into their stock market. Their stock market has been on a tear. There's huge infrastructure projects, and he is all about deregulation or streamlining regulations so he can have a huge economic force. So this is very important because the love trade is highly correlated to rising GDP in India, which has been declining for 3 years in real terms. So it appears that it's rising now.
And now another opportunity that may emerge from Singapore. Frank, let's talk about this latest news item.
Well, I think that Singapore with Asia, there's a mega shift going on. And I think that Kitco in 10 years from now is going to have an office in Singapore. They're going to be in Asia because that's where it's shifting to. And with that, Singapore is going to compete with Shanghai, which has created a tax-free zone for gold trading. So what is Singapore doing, which is basically a tax-free zone? All you have to do is pay a flat tax of 17% on your personal income or your corporate income. After that, you don't pay taxes. So to facilitate this activity as a focus point for trading gold, they are requiring that banks hold gold in deposit in their massive safety deposit boxes of hundreds of tons of gold to trade and facilitate around that bullion.
So big opportunity there in regards to buying of the metal, Frank.
Yes, absolutely. And I think that we're going to continue, and you're seeing Russia, even through all of its drama, it's been buying gold. It's bought 9 tons recently, as we've reported. So I think you're going to continue to see consumption by central banks buying gold.
On to threats now, Frank. Goldman Sachs still bearish on gold. They had their call earlier in the year of 1050 gold. Now they're saying it could even go lower. Goldman Sachs' Jeffrey Curry saying that gold is set to continue its decline. He argues that gold has been supported recently really by the geopolitical tensions in Ukraine, which he expects to fade.
Yeah, and I think he's got a very rational call. His rational call is all the fear trade, and it's a strong dollar. So gold is priced in dollar terms, and therefore, if the dollar is going to remain strong currency of the world right now, then gold will trade down 1,100. It's rational argument. If the dollar starts to weaken, that argument's off the table.
All right, finally, Frank, your touchdown pass of the week. So much to choose from.
What I think is important is just to continue to track these PMIs around the world and these ISM numbers, because the PMI, the global PMI comes up by JP Morgan, that basically takes all the countries of the world, is sidelining. And since it started sidelining, first Japan unraveled, China, which was strong, starts to falls below the 1 month, below the 3 months. What's holding the world up right now is America. If you looked at Italy, it's in a steep decline. And even worse than Italy is France, with their socialist economic policies of running around, tax everything they see. So with that, I think it's so important to follow. Will the U.S. maintain its ISM PMI growth numbers? And China looks like it's turning the corner. And if it does, and PMIs turn positive going to this last quarter, that is, the global PMI starts to really show growth, then I think you can see gold trade higher, along with iron, oil, and the other commodities.
On that note, Frank, thank you so much for joining us.
It's great to be here. And also, it's fabulous to see that you were in New York last week. I think it's so good that what people have to remember is that a lot of the South in Texas are big gold buyers, and they're what they call the conservative Democrats. They're fiscally very conservative, but they have big hearts for caring, but they're financially extremely conservative. From the Hunt brothers on, it's just interesting to see that you're up there covering and broadening the world and educating the world regarding the importance of gold in their portfolios. Thanks so much for your support, Frank. We enjoyed covering the Clinton Global Initiative last week in New York, but it's good to be back in studio, and we'll have many more interviews for you this week. You can email us comments or questions for our guests at newsfeedback@kitco.com. Thanks for watching.